Hey, what's up YouTube? This is Foxtail Digital coming to you again with Black Girl Stocks. And this is another segment of our top 3 option plays this week. So we're just gonna go over a few different trades, strategies, and fundamentals that you can do to make it through, okay? But first, if this is your first time watching this video, please make sure you click that thumbs up button. It really helps the channel. Also, make sure that you subscribe, click that notification bell so you get notified anytime I upload a new video for you guys. All right, so the first one we're gonna be talking about is FCX. This is Freeport. This is going to be a bearish place. And so right now it's trading at $35.19. It has been displaying some bearish moves. Okay, so it is overall trading below the 50-day moving average. So that's a bearish sign. And then also looking at our MACD indicator, a lot of its moves are happening below this center line. So that's bearish too. So one would be a long put. So looking at this, it's giving really bearish signals. Even right now, it just had a correction. But before you get into this play, one entry signal is going to be a MACD crossover. So I'm looking at the 4-hour 180-day chart. You see that we have our blue MACD line trading above our signal. That's signaling this upwards movement. But until we see a crossover, we see this blue cross below this yellow signal, then I would not get into any of these bearish plays. But it's looking like it's really going to set itself up for that. So if we were going to do a long put on this, now these are all going to be option plays. I would do an expiration that's a little bit further out. So I'll probably pick the August 27th. Now these are going to be puts, so make sure I change this to a put strike price. So I'll pick 35. Put on this would be about $200. And if you see right here, the most that you can lose with this is 184. That's how much we're going to pay for each contract. And then the maximum profit is going to be $3,000. Or you can do a put debit spread. So it's still going to be a bearish move. It's just going to be cheaper than doing just this regular put. So if you were going to do a put debit spread, you're still going to be paying money. And so you could sell the 35 and buy the 36. Okay. So this is going to be a little bit cheaper for you. You're going to have a capped profit, but you're going to have a minimized loss. So the only thing you would want for this is for the stock to stay below this 35. So we definitely want the stock to drop. And then the last one is going to be a credit, and that's where you're going to be receiving premium. So our implied volatility is about 51%. So that's not too bad. That's the reason why I'm giving you 3 options for this, because the implied volatility is pretty neutral. The last one would be a call credit spread. So let's change this to a call, and we're still going to be in our vertical. It's just we're going to go up a little bit in price. So you can do a further out expiration date, 27 or September. I would want to sell the 36 strike price and buy the 37, and make sure, because we're doing a credit and we're going to want to sell these, make sure it's in the sell. So you'll see here the maximum profit is 46, max loss 54. That's not too bad of a risk to reward, but it does kind of have a high spread between the bid and the ask. So that's something to kind of watch out for. But overall, I think this would be a pretty good play. And let's get into our second play for today. And this is going to be DISH, and this is Dish Network. So I'm pretty sure a lot of you guys have heard about this. This is also going to be a bearish play. And just looking at the options for this, I'm going to pick a strike price around the 20th of August. So it gives us about a month or so. I would do a long put, or I would do a call credit spread, similar to the plays that we did in the last example. And the reason why, you'll see, even though the stock has been giving uptrends, it just started trading below the 50-day moving average. It's giving us bearish signals. The same thing with the MACD, making most of its moves below the center line. And even though we did have this recent correction, we have this slight price increase, it's looking like we might continue on our downward motion. Okay, so we'll see if we continue on that downward motion. So if we were going to do a put, like I said, we pick August the 20th expiration, not too far out. And so we would want to pick a strike price that's in the money. So I want something that's in the money right now. The stock is at 41.68. You can do something around 41. And you see it's not too expensive, about 175. So you can do something like that. And so the most you would lose is $189 per contract, maximum profit about $4,000 if the stock goes to zero in that time, which it's probably not. And then the next play that we can do would be a call credit spreads. Let's go back to the stock chart. The stock also has an earning report coming up on the 30th of this month. So a reason why you might want to do something that's collecting premium is if you enter it a little bit early and you get in on that implied volatility crush. Option implied volatility decreases the day after earnings. But you want to be careful with that because the stock price for this particular stock has seen a lot of increases after earnings. Well, not this one. That one is a little dip, but overall it does continue to increase after earnings. So just be careful with this one. But if you get in a little bit early, you can take advantage of that implied volatility crush and just hold it through. Make sure it says vertical. You know, it might, you know, you might be safer having your short maybe around that 43. So around previous highs. So we've seen previous highs around that area. So maybe around 43. So for these plays, it's not going to be as much. This one isn't too bad. The max profit is going to be $24 per contract. The most you can lose is 26. And then of course, you know, if you increase your contract size or your position size, then you'll get more. But you just kind of want to be careful with those plays. Make sure you guys click that thumbs up too for this video. All right, and let's go ahead and let's get into our last play, and this is going to be FITB. This is Fifth Third Bancorp, and as you'll see from the stock chart, this is also going to be a bearish play because the stock is giving some very bearish signals. So right now it is trading below the 50-day moving average, and similar to the other stocks that we've looked at, you know, a lot of movement is going on below our center line on our MACD. One thing that's interesting about this though is if you notice here, there is a little bit a divergence here. So if you look down at the MACD, our lows are increasing, but our lows are decreasing on our stock chart. So that is a divergence. So just kind of be careful with that. But like I said, we are in a downtrend. So these are going to be down bearish plays. So you can, for this one, I would just say do a long put if you're going to do something because the implied volatility is so low. For this particular stock, the implied volatility is 34. So that's not too bad play for this. So if I was going to do a long call, if you are going to get into this play, like I said, I would wait to see a crossover with this MACD. So you see right now it's setting up to do what it's done previously for a price drop, but just make sure to wait for those particular indications. For this, I would pick an expiration pretty similar to where we've been. And this one doesn't have weeklies anyway. It only has monthlies. So I would pick an August 20th. I would pick something in the money. So 35. And this one is going to be cheaper. So the maximum that you can lose with this is $95. That's something that you can do. But like I said, just make sure to wait for these indicators on these stock charts. Wait for your crossovers before you jump into a trade, even if we're talking about it on the channel, because you want to make sure to do your due diligence. All right, so that's all we're going to talk about in this video, but make sure to check this video out to learn more about stock trading, how to read stock charts, when to get in and out of trades, and just on how to be a better stock investor. Okay, so check that video out. It's gonna be fire. Trust me. Telling you, baby. Yes, sir.